You are listening to News and Blues podcasts. South Asia's recovery continues as global demand rebounded. Targeted containment measures helped minimize the economic impacts of the recent waves of COVID-19. But the recovery remains fragile and uneven, with significant risks that could threaten and hamper short-term recovery and long-term growth. Among the smaller economies of the subregion, economic performance has been more varied. Bhutan and Maldives grew by more than 6%, while Nepal, the second poorest nation in South Asia after Afghanistan, grew a little below 5% on average from 2014 to 2018 due to the earthquake in 2016. But elevated by domestic demand and public infrastructure spending, these three countries are expected to grow at around 6.5% during the next 2 years. In Pakistan, growth is expected to ease a little to 3.4% in fiscal year 2021 to 2022, as fiscal and monetary measures are expected to unwind. To carry on this impressive performance beyond the next couple of years, though, will require reforms and investments. In Nepal, GDP is expected to grow by 3.9% for the fiscal year 2021 and 2022 as domestic vaccination picks up and tourism and migrant worker flow is recovering in the country. In Bhutan, output is expected to grow by 3.6% in fiscal year 2021 to 2022, reported by the return of migrant labor and large infrastructure projects. In Bangladesh, growth rates are expected to pick up to 6.4% in fiscal year 2021 to 2022 as exports and private consumption continue to recover. In Sri Lanka, GDP is expected to grow by 3.3% in 2021 to 2022, with import restrictions, elevated food prices, and shortages casting a shadow on the outlook. In Maldives, output is projected to grow by 22.3% in 2021 as tourism bounced back strongly, whereas India's economy is expected to grow by 8.3% in 2021. Pakistan and Sri Lanka, meanwhile, have built up persistent and large current account deficits, as well as borrowing from overseas to finance infrastructure in recent years. To meet its balance of payment needs, both the countries entered an International Monetary Fund program. Major reforms such as the introduction of a goods and service tax and measures to make it easier to do business across the region have helped to promote private investment. However, recovery remains uneven as many challenges and uncertainties remain. The strong near-term growth is driven in part by very low base numbers in 2020. The pandemic is estimated to have caused 48 to 59 million people to become or remain poor in 2021 across South Asia. Many countries experienced lower investment flows, disruptions in supply chains, and setbacks to human capital accumulation. World Bank projections show that economic activity in South Asia will stay well below the pre-pandemic trend for several years. South Asia's average annual growth forecast is to be 3.4% over 2020 to 2023, which is 3 percentage points less than it was in the 4 years preceding the pandemic. While the pandemic brought numerous challenges, it has also uncovered new roles for digital remote services, while new inventions have created growth opportunities for the supply of services. Moreover, digital technologies make services more tradable and enable services to increase productivity of other sectors, including manufacturing, as the digital platforms open up new markets for firms. Although most countries have completed peaceful political, economic, and digital transitions, there is good reason to believe that South Asia's impressive economic growth performance will continue over the next couple of years, more likely in the case if the peace persists in South Asian region and the conflicts between Pakistan and India and its other neighboring countries sharing border with India gets resolved. As India is a major part of South Asia, its prosperity mainly depends on bringing peace in the territory.